Hello, this is Andrew from Trend Following Mentor, and in today's short lesson, I want to talk to you about mechanical trading systems or systematic trading. And before I start, just to give you a little quick background for those that don't follow my posts. I've been trading since 1994. I've trend following. I use mechanical systems and systematic systems, as well as I also do discretionary. I also have a book coming out called The Bible of Trend Following: How Professional Managers Compound Wealth and Manage the Risk. I invite you to pick up the book. But let's go back to our topic about mechanical systems. And I talk to a lot of people during the day, investors as well as people that want to learn about trend following. And really what's interesting is that some people have this false impression that mechanical trading systems are like these robots that just have these high win rates and success. Well, it's not the truth. It can't be the truth. I mean, because then everyone would be rich. If you could just buy a mechanical system and then just put your money on the table and then, you just kind of grind it out and make all kinds of money. Well, it's not reality. The reality is, in any mechanical system, and I've been investing in CTAs that run mechanical systems, plus my own systems, algorithmic and systematic, that you go through periods, like now, that you go through really ugly drawdowns. And then you also go through periods where you have series of trades that just don't work. This is what really trading is, and there's really no way to avoid it. And the most important issue isn't the system. It's really how you think as a trader. And you have to precondition yourself to really lower your expectations and accept the risk when you put on a trade. When you put on a trade, if it's discretionary or even in a mechanical system, you have to be willing to lose that money. What I say to myself before I put on a trade is, how much will this trade cost me to see if it'll work? I have no expectation, or I don't want to have an expectation that it has to work. And that's really a very major point. So, like you can go through the internet, you see all these, trading robots with this high win ratios. I'll tell you, it has a high win ratio for the guy that's selling the system. It's not reality. Let's say a robust mechanical system is part of a trading plan. And this trading plan has to answer very simple ideas. It has to tell you what to buy or what to sell. And in my case, I want to buy the strongest, I want to sell the weakest. And I rank groups of markets in order to determine that. I rank markets for my commodity trading as well as for stocks. Then the other reality is you need to know how much to buy or to sell. That's to sell if you want to go short. And I want to add the point, you make much more money on the long side than the short side. But that boils down to risk management. Because knowing how many shares to buy or how many contracts to buy or sell is based on your account size. What does that mean? If you have a $50,000 account, I would suggest very strongly that you don't want to risk more than 1% of your account size on any trade, or $500. And I'll say try to. But we can't control the future. We can't control anything. Because what can happen, and what definitely will happen, is that you'll have some gap moves, and you will have some limit moves that go against you. And there's no way to prevent it. And that's why I suggest you undertrade. And then the other reality is also that you need to know when to exit, either with a profit or a loss. All of this has to be thought out ahead of time. And that's part of what this mechanical system does. At every moment, you know exactly what you're doing, and you should have the mental fortitude to follow it. Again, it's not about the system. It's not about the, let's say, the mechanical or algorithmic trading system. It's about you. You've got to be able to follow it. You've got to have confidence in it. This is really the key of successful trading, amongst other things. So this is Andrew, again, from Trend Following Mentor. I'm here to help you, to teach you. And you know what the reality is? Why do I do it? And I'm going to tell you why. First of all, it's a way of giving back. But I'll tell you on another level that's kind of selfish. Talking about trading reinforces my trading. Because this stuff, trading, is very, very difficult. And it's a mental battle. And when I talk about it, when I say the fact that a trade doesn't have to work, that you have to accept the risks, those are words that I'm looking to also internalize again and again for myself. Because again, you go through periods that you don't make money, You go through periods, long durations that you don't make money, and they're tough. Right now is a tough period for trend followers. But I'm going to tell you this also. There are periods that are unbelievable for trend followers. That's why I've been doing this for 18 years. And what seems to happen is the majority of the time nothing happens or you don't make money. But then the other part is, let's say 3/4 of the time, that's really what happens. And then that other 25% of the time, you step back and you say, wow, can you believe this is happening? Wow, can you believe I caught that move? That's what trend following is. And trend following is really not for everybody. And also past performance is definitely not or necessarily indicative of prior performance. And all we can try to do is try to accept the uncertainty in our trading, because that's the only certainty. The only certainty is uncertainty. Thank you again. I look forward to helping you if you need some help. And again, I greatly encourage you to pick up my book from Wiley Books called The Bible of Trend Following. Thank you.